Welcome back to BizTime. Chinese regulators began accepting applications for the opening of stock index futures accounts this past week. But only about 20 accounts were opened on the first day. And that's fallen far short of market expectations. It has also cast a shadow over the prospect of the stock index futures, which will allow traders to sell short for the first time. Joining us today is Mr. Lu Jianqing from Orient Securities Futures. Hello, Mr. Lu.
Hello, He Jian.
Why are the stock index futures less popular than expected?
Okay, maybe we couldn't say it's less popular, but it's just less people to open the accounts rather than they expected in the first and the second day. And the reason I think first is just after the Chinese New Year's, and maybe a lot of investors not back to their jobs. And the second is the threshold is very high for the investors, especially for the Chinese individual investors, because it's a 500,000 assets is required, and the previous experience such. Maybe there's a lot of people have like 500,000, even 1 million assets. That would be that is no problem. But think about that. If people only have 500,000, they won't put their all assets in the futures index market, which means the real requirement is much more higher than the 500,000.
Is this going to change anytime soon? And will the investors' indifference postpone the launch of the stock index futures on the Chinese mainland?
I think it will take some time. This is the first cash settlement futures in China. Maybe it takes half a year or even 1 year to prove our investor can use these tools rightly, and then lower the threshold, or even they will put a mini contract which is more suitable for the individual investors. For mini contract, the contract size is much more smaller, much easier for the individual investors because they just need less money to trade one lot.
Who do stock index futures in mature markets most appeal to, and is China any different?
The main participator of mature market is the hedge fund, the pension fund, and the insurance companies. When they want to buy or sell a particular shares, they will first long a bit, put some long position in the futures market, or vice versa. When they want to short or sell the shares, they will short a bit in the futures market first to solve their impact problem. For the Chinese market, I think the private equities maybe will be the main participators. Institutional investors have the requirement of hedging and arbitrage, but the institutional investors, especially the mutual fund, which is at this point is excluded from the market. Yes.